Hey everybody, I am Ty Carr, and with me today is Charlie Zygmunt
Hi, everybody.
and Tammy Hess.
Hello.
And we are three accountants talking about this week's news in business, some accounting stuff, some tax stuff. That's what we always do here on the weekly None of Our Businesses YouTube show and podcast. So what are we getting into this week? Well, the global 15% minimum tax is still in the discussions. How does that affect mid-sized firms? Microchip shortages. Does this increase planning and strategizing or just cause chaos? The mighty migration in accounting talent. Yellen opposes the $1 trillion coin. What is worse, not paying bills or paying bills with diluted money? Facebook was down, and if that doesn't bother you, so was Insta, or the gram, or whatever you're calling it these days. Oh, and WhatsApp was also down. That whole FB unholy trinity was out of service. And finally, we're going to talk partnership tax rules and why they can sometimes just be unfair. All right, let's get it kicked off here with Charlie and the global 15% minimum tax.
All right, so I've got an article we can discuss from The Guardian called Global Deal on 15% Minimum Tax Rate for Multinationals Edges Closer. And so basically what's happening is that we talked about this a couple of weeks ago on the podcast, but just as kind of a refresher, there are about 140 countries that are in talks on measures to stop firms from moving profits to tax havens. And so the way that they're planning on doing this is by agreeing as a group to instill a global minimum tax rate. There's been a lot of debate about what rate would be correct to set for that. The one being discussed right now is 15%. There have been a lot of different countries who have, for example, Ireland has a rate that's historically been 12.5%, and it's been kind of the cornerstone of Ireland's foreign inward investment policy. So it's basically how Ireland gets other countries or firms that normally would be in other countries to then come operate in Ireland. And so this for them would be a big change, and they've had some hesitation as a result of that. It looks like they're kind of coming around on that, and they're starting to reach an agreement. There are a lot of critics, though, who are saying that because the U.S. has so many multinational firms on its shores, that they would then benefit disproportionately from this change. And so I thought that was a little bit of an interesting idea because, the global minimum tax is supposed to be this leveling thing that makes it so that it's no longer about where you operate, at least from a tax perspective. And so it's interesting to hear that there are critics who think that this would favor certain nations disproportionately. And so I guess I just want to open it up to you guys and see, what are your thoughts on the global minimum tax? And then kind of more practically speaking, how do you think that small or mid-sized firms can react to this information, or should they? Well, what do you guys think?
In terms of favoring some countries more favorably or some places more favorably, I guess that could be done that could be a relative statement, right? That compared to the way it currently is, it shifts. If there's countries that are getting a lot of business, they're getting companies coming to them because of their low tax status, and then that's really the only major benefit they have for companies. Then they stand to lose if that status is taken away, if it's an even playing field. I wonder if that's what they were getting at with that, or the other point could be, if once you take the tax factors out, then you still have all the other kind of factors about where you locate your business. Like, is it a nice place to be? Is it a safe place to be? Is it what is the network infrastructure there? What is that's a big thing today, right? Like whether that location actually has the IT infrastructure, is it a place with a good rule of law? There's a how much do you have to pay the workers, right? So it could be that you set the corporate tax it sets an even playing field, but if wages are otherwise lower in some areas, then they start to be winners, right? Perhaps. I don't know which angle they were thinking about whether this could create winners or losers, but those were some thoughts that came to my mind on that particular point.
Yeah, I think with me, what kind of got me thinking about that's kind of connected to what Ty was saying is that there's a lot of thought process when you decide where to have your operations be located. And this is like another kind of added factor of like really making sure that you understand the tax regulations, and having the minimum set may be helpful in that sense. But there's a lot of other factors to really consider and think about. But I didn't, in terms of your second question, is this going to impact smaller, mid-sized companies? It may, but it seems like this it tends to impact the larger companies that are, really working overseas or having multinational kind of stuffs in their business. So, yeah, I don't know how much if it's going to impact the smaller businesses.
That makes sense. Yeah, no, those are good points, and yeah, it'll be interesting to kind of see how it all plays out, and we'll be watching anxiously. So,
I would interject though on that particular point that I wouldn't understate kind of what happens in kind of the supply chain and the downstream companies. Like we're sitting here in Portland, Oregon, where there's a lot of businesses around the Portland metro area that are somehow built off of the services or the things they do for Intel or for Nike and things like that. And I think about like Intel specifically, I think you can look in their public filings and know that they have Ireland operations, for example. So I happen to know that there are businesses that support the logistics related to their operations in Ireland. So I think there are on the margins, like your average kind of mom and your average kind of unconnected small businesses that aren't connected in that way to the larger businesses. It's hard to see how they are directly impacted, but the small business community in a community like Portland, a lot of which is built around the bigger businesses, could be impacted because of downstream effects.
Well, and just to kind of expand on that point, even if you're a small business who feels like it doesn't have connections to the outside world as a whole, if you buy components from any company and then they basically know they're going to have higher tax, and so they build the cost into what they're selling to you, this thing, which seemingly has nothing to do with this whole debate, suddenly is affected by the price indirectly. And so, it'll be interesting to see what sort of happens. I think that's basically what you were saying, just kind of looking at it from another angle there.
Yeah, you're taking it from the customer angle, of the bigger companies, and yeah, I think that's a good point too. I think I think that's where people can be cynical. They either believe that's true or sometimes they're cynical. It's like, well, how much of the corporate savings get built into consumer prices, right? That's the question. And if you assume that's somewhat true, then yeah, the downstream effects can affect consumers as well.
Yeah, I think it'd be interesting. Do you have another article we can talk about, Tammy?
I do. So last month, you talked about GM's microchips shortage and the impact that it was having on their production and their sales. This week, I saw an article regarding the impact of the microchip shortage that will have an impact on the 2021 holiday shopping. The list of items that require microchips is extremely long. There's basically a microchip in everything from toys to toasters. So this article is really encouraging people to shop earlier, not to wait for sales, have a backup plan, and watch out for scams that may occur as we get closer to the holiday season. But they also encourage people to budget for increased pricing as a result of the shortage, because essentially, if there's a high demand on something and there's a lack of supply, prices are going to go up. So when I was reading this article, I think you can kind of approach it in two different ways. One, will it increase the planning and the strategizing for the upcoming holiday shopping season? Or is this going to cause panic and chaos for both the consumers and for businesses?
I'm sure there's lots of companies doing planning and strategizing around it at the moment, but I'm also sure it's going to create a lot of chaos. Yeah. So I think, it's like, the number, probably in part because not every business is really planning around it sufficiently, and probably in part because despite our best planning, it's hard to. I think it's hard for companies have a hard time really predicting what the ultimate outcome is in terms of what can they do from a pricing standpoint versus what demand will be. I think considering the demand curves and the pricing, I think is very difficult to do. Maybe your bigger companies are going to be better at that. I think I think we were talking smaller to mid-sized businesses a minute ago, and I think we see that it's very difficult, and I put our own business in that category. It's very difficult for those of us in the small to mid-sized business category to connect what we do with pricing with kind of shortages and supply demand issues. I think it feels like in the small business environment that we're always on the tail end of that, or that we're always behind on that point. In other words, if there is a shortage and prices should go up, we don't get around to raising our prices until like too late. We're always thinking about it at the tail end. So, and because so much of our economy is built on small businesses, if I'm right, and that's pretty much how most small business operates, then all the planning and strategizing being done by large companies isn't going to prevent the chaos that comes at a macro level due to how most small businesses actually operate.
Yeah, I think this is like a really interesting one, because I know from my personal experience, I've got some clients who just this issue does not seem to impact, even though it seems like these are in everything. I've got clients who this is not an idea that they talk about. And then I have a few in particular who are very keyed in on this issue, and it's causing them a lot of issues in trying to fulfill the orders that they normally do. And so for them, it's become a gigantic planning thing of reaching out to customers and letting them know that the lead times are longer, raising prices so that they can accommodate how much longer it's going to take for everything to get fulfilled, and they can really make sure they're making good sales prior to having them be made, and that kind of a thing. And so I think there's a lot of different ways that a business could kind of react to this, but it's totally dependent on how plugged in is that business to things that contain microchips. And so, it'll be interesting to see how that goes. I know for them, another big consideration is that, just to kind of loop it back into accounting, I know that having a large amount of unearned revenue as a result of having sales that you can't fulfill could cause changes in how you view your balance sheet. And so if you're stuck with orders that you can't actually do, then that can create a unique financial challenge for you that you maybe wouldn't have had this shortage not happened. And so just kind of an interesting way that this plays out in a little bit of a more practical accounting way.
Yeah, I think the other thing that stuck out to me is that it's really hard to tell how the consumers are going to react to this, right? So they could either starting tomorrow go out and buy as much as they can and then sell it on the black market if they think that they can, gouge prices. In terms of all those things, there's also that element of how this will play out for not only just businesses, but on the consumer standpoint. And I'm not sure what businesses can do to prevent that, but yeah, it's going to be an interesting holiday, it seems like. And Ty, you have our next article?
Yeah. So the next article, our last two articles actually kind of follow up some topics we've been talking about in previous episodes. And our next article is similar. We've talked about kind of what's happening in the labor market, and I think we may have even touched on, how is it or isn't it affecting accounting firms? And so this article comes out of the publication Accounting Today, the online publication Accounting Today, and it was titled, "It's Not the Great Resignation, It's the Mighty Migration." And so, I think across the board, people are talking about this great resignation where people across a lot of industries and professions are just leaving their jobs. And what this article was looking at is, well, how is that affecting in particular accounting firms? And there were many interesting things in this. The article was focusing primarily on the question of, well, why accounting? Why is accounting being hit so hard by this? So it has this theme in it that accounting firms, in particular the accounting industry, are being hit by this resignation or migration in particular. And in asking, well, why is that? It starts with a chart that shows why most accountants are working harder since the pandemic began. So did the pandemic essentially push accountants over the edge? And in that chart, they show that, of the survey that they did here, they're saying, well, 46% of accountants are working longer hours, 58% had to cancel or reschedule vacations. Now, I think that one's interesting, right? Because did they have to cancel and reschedule vacations because of work, or did they cancel, reschedule vacations because we were in a pandemic, right? Or a little bit of both. And 25% felt that their sleep was being interrupted by work emails or calls, and 38% lost sleep due to work-related stress. So, that kind of sets the stage, but it's still, and I'll throw one other anecdotal thing in there. They were talking about an accounting firm that, in trying to keep their people, was offering pet insurance. So I thought that was particularly funny. But in any case, to get into the question of why accounting, they start with justifying the title of the article, that it's not a resignation but a migration, and is saying that, and basically they're saying, well, people are moving, they're not full out leaving the accounting profession, they're just moving into other jobs that they find more satisfaction. So essentially, they're saying if it was a resignation from the accounting industry at large, people would be just leaving accounting. And particularly if you're talking accounting firms, you'd talk public accounting. And the context for that point is that people have been leaving public accounting at a pretty high rate forever. I mean, that's the industry's been notorious for that you start your career, often many people start their career in public accounting, and after the first 2 to 3 years, they realize, that's not what I want to be doing, and they leave. And that has always been the high rate of turnover in that has been a resignation, so to speak, not necessarily from the particular people they're working with, but from the entire process, from that industry, from public accounting in total, has been very common. And so I think that was kind of the implied backdrop to this point, that the article is saying, well, we're not necessarily seeing that people are intending to resign from the profession in that way, similar to how it's been before, but what we're really seeing is people migrating to other things that kind of fill their bucket, so to speak. So what are the primary things? Well, they go in depth of these things, but I'll just list them off for our discussion here and see kind of what our thoughts are about these influences, these things that are causing people to migrate from their accounting firms. They list off politics, cultural misalignment, lack of flexibility, lack of vision or leadership, and lack of experienced management in leadership. Those are some interesting rationales or reasons why this is happening. So maybe I'll open it up to Tammy and Charlie to kind of give their take on whether they think those are the right things and what they think about those particular items. And then I'll circle back and throw in maybe more of my own thoughts about those particular items.
Yeah, I got really excited reading this article because I think that in my past, as in a public accounting firm, all those things that they listed there, why people are currently leaving, I would say that those things were the same issues back in the day when I was at an accounting firm, or what is, kind of been seen over the many years since I've been part of the industry. I think what was missing for me is the fact that while the article even says that, accounting has been a revolving door, so to speak, in terms of the way that people are always coming in and going out. To me, what it seems like it's happening right now is that people aren't coming in. So once they kind of leave and go on to fill their bucket, they're not getting kind of the fresh new talent coming in to replace those folks, or to grow people into the manager level positions and things of that nature. So I think that would be something that would be interesting to really dive deeper in, is how do we, knowing that the accounting industry has kind of these faults and these challenges, how do they fix that to encourage people to come and join the firms and stay in that profession? What do you think, Charlie?
Yeah, no, I think that's exactly right. I was having that same thought as we were reading it, of just like, these are problems that are not just in accounting. They are in accounting, yes, but they may be more prevalent in accounting, but these are problems at anywhere that you try to work if you don't agree with the culture and those sorts of things. And I guess it'd be hard for me to say that they're getting worse. I never went the public accounting route, and so I didn't actually get to experience that. But I would say that from private accounting, I've always, as you just read on these discussion boards and whatnot, it always felt like that it's an entirely different world when you're in the private accounting space. And so I've seen a lot of that same sentiment of people kind of starting their career off that way and then moving into a different direction of what they deem to be either easier or just better for them personally. I do think it hits the issues on the head in terms of those are the things that would cause me to want to leave. I just am not convinced that those are necessarily accounting problems or that they're necessarily different than they had been in years leading up to it. But yeah, I do think, I think the other point worth mentioning here is that I've heard a lot about, I think there's another trend behind the scenes that isn't specific to accounting, and it's just the general culture's willingness to work. I think that's a variable as well. I think as you look at different age brackets and different groups of people from different cultures, it's not a given that any given group of people is as willing to work as some other group. And so I think over time, a lot of places have found that there is this, I don't know, booming, I don't want to say anti-work, but there is a change in perception that is causing a lot of young people to not get as devoted to their careers as people may have been 10 years ago. I don't know if you all have experienced that in people that you've worked with, but I've just seen that on kind of message boards and also on articles that we've read in past episodes. And so I think that's another factor that could make it seem like people are leaving accounting when in reality, maybe they're just resigning a little bit from work as a whole. But yeah, it would be interesting to see how it all plays out.
Yeah, I definitely think that is a factor, Charlie. And I think kind of building off what you said, I think these factors are probably issues that aren't unique to accounting. They're issues, I mean, they're not unique particularly to public accounting firms. They could be issues in accounting departments of companies. They could also be issues beyond accounting. They could be issues to the ranks of professionals or people working across any organizations. And I think, yeah, it's interesting when you think about what you were talking about, people not necessarily wanting to work as much. I think, that speaks to one of the categories that they had in here, the lack of flexibility sometimes on the part of the company, because I definitely see that. And I think what sometimes happens from a leader's perspective, or I think what I see other leaders do sometimes, is that they make assumptions about what people in their organization or on their team want and what they want out of life, and so that we have, we can build financial models and we can build kind of a way of thinking that is based on people want to work or are willing to work at least this much because they want this much compensation, and we can figure that all out in spreadsheets and that sort of thing. But a lot of times underlying that is this assumption that maybe people want to make a certain amount of money and maybe they don't, right? Maybe we're over assuming what people want to make or what people want in terms of their professional career, what kind of professional accolades they may want at a certain point in their career as well. Another part of that may be that we may have preset notions that, well, after you've had this many years of experience, you should be at this quote unquote level. And maybe the people that we're working with on our teams just don't think that way anymore, or they're willing to take longer before they get that particular accolade or that title or that level, because they would rather have more work-life balance between now and then, right? And I think that considering that it's possible that you've got talented people who may have some of those thoughts or the ways that they ultimately want to design their life, I think if leaders are flexible and they step back and they think about like, oh, well, how would I redo this model in a way that this works for everybody? I think there's opportunity there, because and of course there's there's no opportunity. You get to a terminal value if the issue is that people just want to work less but they want to make more money, and there's no way to do. You have no way to do that, right? But then that also plays into the vision piece of the category of what they're talking about in terms of, well, what are you doing? How do you create profitability in your firm? Do you have a vision that could expand profitability and make it possible for your team to actually, the potential for people to make more money and not have to work as hard? I think you have to at least be trying for that. I think obviously there are market and commercial realities that reach a limit on that. But I think that having vision from a leadership perspective requires that you continue to challenge what those market and commercial limits are for the benefit of your entire team, for this exact reason. So those are some of my follow-up thoughts on that point. I also would throw in that a couple of these things I think can be challenged. A couple of these categories can be challenging for a growing organization, like cultural misalignment, and then again talking about vision. And the reason I think about that is I know myself, and growing a small business organization, is that your culture may be one thing when you first start and you have an idea of what that culture is going to be, but then as you grow and things change, you end up with a different culture. And so you have to be diligent from a leadership perspective about knowing where you're at on that, and if you're okay with the changes and what that might mean. That in fact you may have team members who at the beginning were completely aligned with your culture, but because things have been changing in the organization, you might be leading the organization to a place where some of your team members are bound to be misaligned, and that's not necessarily a bad thing, but being aware of it and thinking about how you're going to deal with that is, I think, important. And then I think the same thing kind of goes with the question of whether you have visionary leadership or not. I find when I'm growing and working hard at growing the organization and working hard at doing the work, it's very easy to lose track of vision, and that vision can wander. And so it takes effort to like step back and say, okay, what was our vision before? Is that what we still want it to be? And what is the vision? And making that a priority to have a clear and vision that you're for what you want the organization to be, what you want for the team, and keep that going. I find that I think that is a challenge, and I have sympathy for all of our fellow colleagues and leaders out there of organizations that deal with wandering vision, because I deal with wandering vision as well. So
I just want to say I agree with that too. I've had that even, I know you're taking it to the organizational level. I've had that same feeling even on individual projects. You start working it, you have an idea of what you think it should be, and you start going towards that. And then you get kind of lost in the weeds of what you're working on. And sometimes you have to step back and be like, okay, what am I actually trying to do here? And so I could see how, blown up to that scale, it would just magnify that issue even more. All right, so I've got another article we can talk about from Seeking Alpha called Janet Yellen Opposes $1 Trillion Coin Solution for Debt Limit. And so, as I'm sure many are aware, there is a debt ceiling crisis that is currently escalating on Capitol Hill. And basically, there's been a couple of different ways to a million different ideas presented on how to solve this. One of the ones that's gaining steam that I personally have a little bit of a hard time coming to terms with is the idea that the Treasury would mint a commemorative coin worth it's a platinum coin, so get excited, and it's going to be worth $1 trillion, and we're going to put that in there, but it's going to be an asset swap, and because of that, we're going to be able to pay all of our bills, and everything is going to be just fine. But I'm a little skeptical. That's the idea. Basically, Janet Yellen is not a fan of the idea, and she's basically came out and said that if we were to do this, that if we were to either default or to do this idea, that it could likely precipitate a historical financial crisis that could compound the damage of the continuing public health emergency, as well as triggering a spike in interest rates and a steep drop in stock prices and other financial turmoil. And so I don't know that I'm oversimplifying, or maybe there's more to it than I understand. But when I look at it as if we're trying to decide on whether or not the US is going to default, or whether or not we're going to insert a fake amount of money through way of a technicality or formality, it's kind of like choosing between two evils. What's worse, not paying your bills or just pretending that you paid them by altering your entire perception of what money is or what the value is until you feel that it's paid? I don't know that that is an accurate description of what's happening here, but that's kind of how I interpret it. So I wanted to open it up to you guys and see, am I understanding this idea correctly, or is there maybe more to it than I had given credit to?
Yeah. Before Ty jumps in, I'll say that I am in the same boat as you are, Charlie. That's kind of how I thought about it. And even like if I take it to a personal level, if someone individually doesn't have money to pay their loans or their debt, and they just make up something and say, here's what it is. I mean, how do you come up with fake money to pay off your debt anyway? So it's like all these different things. Like it doesn't seem like it's a real life kind of situation that we even could do. Like I'm not sure how that solves it, but at the end of the day, if you don't have the money to pay the debt, I mean, aren't you falling into default by that term, regardless of what you do, or if you sign contracts or you do something else to kind of shuffle things around, the money is not there. So I don't know how you create money out of thin air and if it actually will work. So I'd be curious to see what Ty's thoughts are on this one.
Yeah, I guess I'm trying to understand how it's different than just the $1 trillion coin. That is, how would it be different than just printing more money? Which is kind of something we do. So, I get, other than I get maybe this, I bypasses some checks and balances and does it, in an extreme way, all in one fell swoop. And so I think that generally speaking, if it is similar in that way, just simply creating more money, more currency when the government does that, I think that's what we're speaking to. The intuition is it just dilutes the value of the money that's out there, which is basically I've always thought of that scenario as being a tax on wealth, right? Because basically it's, if you've got money in the bank, it's suddenly worth less because you've diluted the value of money. And so it's a way of taxing wealth in order to resolve an issue. And in the past, I've said on this topic that I'm not necessarily against that the kind of a general tax on wealth that comes from printing more money, I'm not necessarily against, but I don't know enough to know for sure that this is radically different, but it feels like this is different, like it's more extreme, maybe just in the timing and in the application of it. So feels like I should be against it, but I don't know exactly why. Otherwise, yeah, I'm against the government just not paying its bills. I think defaulting, I think if the question comes to just raising the debt and printing more money over time to pay bills, I would be generally more in favor of that concept. So yeah, those are my thoughts for what they're worth. I think I'm as confused as the rest of you as to what the real meaning of minting this $1 trillion coin would be.
No, I think that makes sense. And I'm glad to hear that I'm not the only one that has these kind of thoughts about it. And I think the last thing I'll say on it before we move on is that it feels like a misapplication of the rule, because the article says that the law they're using to do this is worded as the secretary may mint and issue platinum bullion coins and proof platinum coins in accordance with specifications, designs, varieties, quantities, and inscriptions in the secretary's discretion, may prescribe from time to time. So in other words, the way that I read that is that it seems like that law was set up to give the Treasury the ability to create like souvenirs or like some kind of commemorative coin to mark an event, maybe, not to put, some number there and have it fix all our financial problems. So yeah. All right. We can move on to the next article now.
All right. So many of you may be aware that Facebook, Instagram, and WhatsApp were down for 6 hours on Monday. I will be the first, I'll have to admit that I am not a user of any of those platforms. So my day was not impacted by any means with the systems being down. But I did find an article that described the impact it had on small businesses. And I didn't realize that there's roughly 3 million businesses that advertise on Facebook. And while Facebook didn't charge any of them for advertising services during that 6-hour shutdown, businesses have claimed to have lost thousands of dollars worth of sales during that 6-hour period. Many business owners were left scrambling. Some went to old school and printed hundreds of flyers to post around locally. Some started sending text messages to their customers. And they were like mad panic, within the first hour of it being down. And so as there are so many businesses that solely rely on Facebook to advertise, the question that kind of came to my mind is, does a shutdown like this cause people to change their advertising strategy? Should they quickly jump into to diversifying their kind of strategy, or is this a one-time blip on the radar? What do you guys think?
I definitely think that this is a good opportunity to consider who your stakeholders are, whether that's your advertising partners, whether that's anybody that you do business with. And I think this is one of those things that we tend to accept dominance here. We let it be true that Google and Facebook are the two big players, and that's who you advertise with. And I'll tell you that for a lot of the clients that I work with, that's who they're using, and that's all it is. And so we kind of accept that. But I think that, yeah, anytime you have over dependence in any part of your operations, whether that's your advertising, whether that's your sales platforms, anytime that you're overly dependent on any one party, I think it's problematic. And I think the only way to really be systematic about not getting into that position is to constantly do what I would call stakeholder analysis, which is like looking at who you're doing business with and thinking yourself, are you too reliant on any one partner for any one thing? And it's one of those things that, like, if you try to bring this up as an idea to companies, they're not excited about it until the issues start up. Because if I came to you 2 weeks ago and said, you guys should not be doing all your advertising through Google and Facebook, it would seem very strange. But, today it's like pretty clear that that was, the outcome that we got to. So,
yeah, I think that is 100% right on that. Especially if we're talking to small businesses, some small businesses, they're heavily based on Facebook for sales and the advertising channels. And so if you're driving a lot of your business through social media, we don't drive a lot of our business through social media. We do a lot of social media stuff, but it's not like if, we do a lot on LinkedIn, for example, but if LinkedIn went down tomorrow, I wouldn't be worried that we don't have that it's a massive problem for us, because while we do a lot of stuff on LinkedIn, articles and posting our podcast and videos and stuff like that, a lot of our business comes from a variety of channels. We've occasionally gotten business through social media, but we get a lot of our businesses through traditional referrals and relationships and things of that nature. So it's hard. It's a little bit hard for me to relate to. I know businesses exist where in today's world where they drive like 100% of their business, or at least 90% of it, through what they're doing in groups and through advertising and stuff on a channel like Facebook. And I think if that's the case, then exactly what you said, you really should be looking at, well, how do we diversify so that we're driving some of our business through other channels? If social media is how we drive our business, then making sure that we're driving some of it through other social media platforms would be appropriate. But it'd be, if we could drive a lot of our business through social media, it would be interesting and a good problem to have on my front. And then having to worry about diversifying it would be the next problem for me in that regard. So yeah, that's my take on it.
I think what it left me to think about, or for businesses to think about, is to try to strategize early, or kind of diversify. I mean, diversify, I think, is key in that standpoint, because I think the biggest challenge that they had on Monday was they had no idea when Facebook would be coming back up. And then that is the sheer panic of what happened. So you had someone who'd run to a local printing store and do, flyers, which you would think that, how long does that take within the 6-hour period of time? But without the knowing of what it could be, I think that causes people to kind of rethink their game a little bit. So being 100% reliant on something is probably never a good idea. How you mix that up, I'm not sure the best way, or there's a good percentages of split, but it's something to kind of people to think about before something like this happens, and they are left scrambling. So Ty, you have our last article.
Yeah, so this is one that I posted myself on I mentioned LinkedIn a minute ago. I posted myself on LinkedIn, and so we'll have a link, of course, as we always do, in our YouTube channel. But you can also just look up Ty, Tyee, Carr, Carr on LinkedIn and find the article there. This came from I saw kind of a court case on a tax court case come through on a partnership issue. And it was very basic. Like it was a little bit shocking to me that something like this would even go to tax court, as basic as it was. And unfortunately not in the favor of the taxpayer. But it did kind of lead me to ask, well, while the tax law on this is pretty clear, is the result fair? Would you think of the result as being fair? And so the issue that happened in this particular case, the taxpayer, we'll call Miss Dodd, she was a partner in a partnership. And as our listeners may know, I'll review real quickly that partnerships are subject to what we call flow-through taxation. So when you're a partner in a partnership, the partnership doesn't pay its own income tax for federal tax purposes. It flows through, or sometimes we call it passes through. It flows through the income to the individual owners, to the partners, and then they pay income tax on the income that is reported to them. And the reporting mechanism for that, if you have been in a situation like this, you'd know the reporting mechanism for that is called a Schedule K-1. So what happened in this case is Ms. Dodd was a partnership. She was in a partnership, an owner in a partnership where they owned a building and they sold the building, and there was a gain on that. And then she was allocated about $1 million of that gain showed up on her K-1, but she never got a check for $1 million. So there was no cash that went to her. And so, she looked at this and said, well, that's crazy. How could I have $1 million of income that I would have to pay tax on when I don't see any cash coming my way at all? And in fact, she knew enough about the partnership's business to know that there was no way the partnership could ever give her that cash, because the cash received from the buyer of the building that the partnership sold was used to pay off a mortgage on the building. So she knew that all the money that was received on selling this was used to pay down the debt or pay off the debt on that property. So there was no money for her to ever receive. So that left this kind of feeling of, well, is this fair? How could I be allocated a gain where I'm never going to get any cash out of this thing in that way? And in that, I would say, well, that is, it's it is a clear application of tax law that yes, that gain allocated to you on your K-1, you are subject to tax on it, whether you get any cash or not from the partnership. So the way that the case was framed made it seem like that was the question. Like, could you possibly have income from your partnership even though they didn't pay you cash? If that's the only question, then yeah, of course you could. That's an undeniable application of the tax law for partnerships. And so, like I said, it's a little bit shocking that even went to tax court. But of course, the court affirmed that result, and it was determined that she does in fact owe tax on that $1 million that's allocated to her. But the question that I really wanted to pose to Charlie and Tammy here is that actually fair? Does that make sense? And in the article, I went through kind of the mechanics, the tax mechanics of what likely could have happened here, right? Because this actually is not that unusual of a situation in dealing with real estate. Because what could very well happen is if you set aside down payments, if the partnership used over $1 million of borrowed money to essentially buy a building, then over time, it would be allocating tax deductions on that $1 million to the investors, right? And so presumably, I would assume that the way this could happen to Ms. Dodd is that she was actually being allocated tax deductions in prior years related to this borrowed money, this $1 million. So she essentially had the ability or was given the opportunity to deduct up to $1 million on her tax returns over probably many years. And so ultimately, if the property is not sold for more than the mortgage, yeah, you don't get any cash back. But what essentially is happening is the gain that she's complaining that she didn't get any cash back on, that gain is just reversing all the deductions she already was given. So she was given presumably $1 million of deductions previously, and now she has to basically reverse those deductions by taking a gain. And in that way, if it's that, in that kind of simple scenario, what we'd say, was there any benefit to this whole scheme at all for her? And we'd say, yeah, there's the time, it's like a loan, right? She got to reduce her taxes early on and then has to pay it back later. And so she got the time value of money on that, right? Essentially from the government, that would be what the value of that whole scheme ended up being. But that would be my explanation for the mechanics of what's going on here. And so in my nerdy head, when somebody says, well, is that fair? It's like, Well, kind of seems fair to me, but I recognize that fairness is a subjective question. So I'll pitch this question over to you, Tammy and Charlie. How does this sound? Does this whole thing sound like it was fair to Miss Dodd from your perspective?
Yeah. So I think at the face that when we first started the story, it does seem like it's unfair that she didn't get the $1 million cash. It seemed like it just was crazy that she would end up having $1 million gain on something that, she never saw in her mind the benefit for. But when you go through that whole entire example and really illustrate what happened or what may have happened, it does make sense and it does make it fair. But it's hard for most people to really understand that full concept. I mean, tax and tax law is confusing to most people. I mean, even to experts, it's confusing, right? So how do you expect a person to really think about those consequences in the beginning of getting those great benefits in terms of tax deductions over, let's say just a 10-year period, but then to all of a sudden sell it. And even though zero cash kind of went in your pocket, you have to unwind all those deductions that you took in the previous years. That's not an easy concept for people to think about or to know, or let it alone just remember from something that they initiated 10 years ago. So I do think it's fair. It's just, I do understand why she tried to fight it. I mean, that makes sense too. I probably would have done the same thing in that sense. It's just like logically, it doesn't make sense. But then when you really think it through, it does.
Yeah, I feel the same way. It raises that question of, if I didn't make any money, what will I even pay it with? And like you said, I mean, it came from the fact of having past deductions. And of course, in all those years in which those were happening, there wasn't going to tax court in reverse, right? Saying, how did I get this deduction for cash that I didn't actually lose in the same way that I did when I undid it with the gain? And so, yeah, I do think, but I'm with you. I think it seems like a very foreign concept to people who haven't had that full benefit of the story leading up to it. And I think that it's one of those things where if you take a lot of little immaterial things like a deduction sheet, none of those triggered any interest because they were all so small that nobody cared, and they were all good news. So there was no reason to look into it. And then when you take the opposite effect of that, lump it all together into one big period, and then try to just put it into one return, well, now she's paying attention, right? Now we're going to go talk to tax court. And so I see how it happens. It makes sense. I don't feel like anything unfair is happening, but I feel like this is one of the reasons why, and not to I don't know, it seems like we're selling here, but this is why you need qualified tax advice. This is why you need to understand your return. This is why you need to be aware of what you're signing, because truthfully, it's just not easy and it's not always intuitive. And even sometimes things that aren't easy or intuitive are actually not unfair. So that's my take on it.
I was just going to add that, Charlie. I think that I said it a couple of times for different reasons, but the idea of planning and strategizing is important for everything, whether it be your 2021 holiday shopping, whether it be if you're going to diversify your advertising plan or on your tax strategy. I mean, really being able to plan and to really strategize and know those things before it happens is going to really help people as they kind of navigate through some of these things that pop up.
All right, everybody, that's going to do it for this week's episode of the None of Our Businesses YouTube show and podcast. Tune in again next week for more business updates from an accountant's perspective, and be sure to check out our sister podcast, Profitless on Purpose, where they discuss anything and everything relating to the nonprofit space. Thanks for watching.
Bye, everyone.